Five, six, seven. Welcome, everybody. This is the Smart and Public podcast. It's a podcast that discusses business, careers, and life through the eyes of public relations and communications experts. Today, we have another wonderful guest on the show. A good friend of Dovesy and I for a long time, John Cummings. He's the managing director, CFO, and CEO at Smith Point Capital.
Not CEO,
Welcome, John.
but sorry.
Did I say that wrong?
You said CEO, but that's
I'm
maybe
ready.
uh,
Just handing out. Can I have one too?
Managing Director, CFO, and COO
You
at
got
Smith
it.
Point Capital. Nailed it.
I'm still getting used to that title too.
Well, it's a mouthful because you do a lot of things. You get to cover a lot of bases. Okay, let's start out with, I want to introduce everybody to you and all the great work that you've done. Everybody that does not know John Cummings and the magic of John, like we are in for some Australian accents. We are
Yeah.
in for a lot of knowledge. We are in for
Wow.
a lot of like metaphors. Like he is a storyteller, even though his background is in, maybe not the traditional storytelling sense. So he's such a great partner. We've worked with him for ages at Salesforce, where he was an incredible leader there. And we're just so thrilled to have you on the pod. So thank you. Prior to joining Smith Point Capital, he was the Senior Vice President of Finance, Corporate Development, and Investor Relations for Celonis. And before that was the Senior Vice President of Finance for Salesforce, where he was the head of Investor Relations and was recognized by Institutional Investor Magazine as the #1 ranked IR professional for software industry for 5 consecutive years. I didn't know that about you, John.
Very advanced. So,
That's better
Later,
than
John,
not a lot of coverage.
it's a different niche, different
Yeah.
audience. Later, he was responsible for corporate financial planning and analysis, which oversaw the company's $17 billion with a B annual budget. John began his career with Government Investment Management Corporation, a long-short hedge fund where he served as an equity analyst. And in connection with his work there, John served as a representative to the Asia Pacific Policy Center, a Washington, D.C. based think tank on economic and security policy, and served as an advisor to Malaysia's former finance minister and deputy prime minister, Anwar Ibrahim.
What a CV, John. I feel like
I know.
just wow. Yeah. We're,
Yeah.
we're very
Long
blessed
time
to have you
ago.
on the pod. I feel like that's one of the more distinguished CVs we've had. We've had some great guests, but that is definitely up there.
Well, we'll have to work on that for you guys. So,
Thank you. Yeah, just building it for this very moment.
yeah.
Why
Yeah.
don't you start with kind of telling us a bit in your words, like what has your career looked like up to this point? Like how did you fall into where you are today?
Yeah, and it definitely was a fall into. I mean, I studied political science and international relations in college, and as soon as I was done with college, moved east to Washington D.C. and peppered the town with resumes, and this unusual sort of hedge fund was looking for someone to do political analysis, and I got the job. I got on well with the CEO. I knew nothing about financial analysis. I didn't know what hedge fund was. It's true. And so it was one of these things where you fall into something, you get lucky, and it turns out I fell in love with the job and was there for about 7 years. And then was interested in actually going to work for the corporate side. So on the other side of investing, what is that like in the companies that we're investing in, and what's really driving value for those companies? And this is another lucky accident where one of the companies that we had invested in was looking for someone to be and do some the director of investor relations. So I knew a little bit of what the function was, and so I got into that role and discovered very quickly how much I loved it, because you get to really immerse yourself inside the company, and investor relations gives you a license to kind of go anywhere in the company you want. So you can get to know the numbers as well as the CFO, get to know the strategy as well as the CEO, and everything in between and below. So risk management or operations, sales, anywhere you want to go, you can inspect the business and really immerse yourself from a lens of kind of intellectual curiosity. And that's why I discovered I really loved the role. And then you get a seat at the table to voice an opinion. Like, why the hell are they going to listen to this 20-some-odd-year-old kid, pontificate about what strategy is, because you're that intersection between Wall Street and the valuation of the business. And turns out people care about what you have to say, which I was very surprised about. Candidly. And so that's kind of how it happened. And I got involved in a number of different companies, including running investor relations at Sybase, and really came to really love the enterprise software space. And that's how I ended up at Salesforce after some other twists and turns. But that's Salesforce, and then that led me to where I am now here at Smith Capital.
Hey, John, for our audience who maybe work for a smaller company or in a different space, how would you kind of pretend I'm 5? What is investor relations and what's the function within a corporate?
Yeah, so for a 5-year-old, I do a picture book. You can maybe do investor relations at bedtime. The sort of stated goal for investor relations is making sure that a public company's equity or public equity, in most cases, has an efficient market. So we really help make sure there's liquidity and making sure that that people understand the messages of the market. And then there's the tactical element of it, which is, hey, every 90 days you got to put out your results. There are rules and requirements for that, and instituted by the SEC in the U.S. and elsewhere, and other regulators in Europe. But so that rule really drives the day-to-day demand of the job, and that is really to mostly be a representative to Wall Street for the company. Now, I think a really important role of that business is taking intelligence from Wall Street or the public markets, bringing that back inside the business, disseminating it in such a way it can really influence strategy in the business. And I think if IR is done well, you can really become a trusted advisor to executives. And that's, again, why I'm here at Smith Point Capital, because I had that relationship with Keith Block, who's one of the co-founders, the founder and managing partner here at Smith Point. And that trusted relationship stems from the ability to really understand what's going on inside the business, understand what's going on in the capital markets, putting those two things together to shape not just the messaging, but even the strategy of a business, and right down to the capital allocation inside the business. And that is ultimately where that intersection of finance and IR come together. So maybe that's not for a 5-year-old, but a big part of it is you're really, you're serving that side of bringing intelligence in, and then, serving as a spokesperson externally. But I also, as some of the work we did together at Salesforce was really serve as a tool to help educate what was going on both internally and externally to the employees. So in investor relations, right, one of the key roles is to work with the 3 main audiences that we intersect with in the role. And that is external audiences, which are primarily investors. Those are people who actually buy stocks. I think big mutual funds, of which you probably all are part of. The buyers of those stocks are called the sell side. That's a key audience, probably number 1. Number 2 are the sell side analysts. These are the banks who actually sell stock to investors. And they influence, through their research and their research writing, like journalists covering the business, the day-to-day of whatever your public company is. And then the last audience and key audience, and there are a couple of subsets to this, are your employees, right? So really educating employees what's going on externally and internally, because so many employees that I've worked with over the years in investor relations roles don't fully understand, in some cases, the breadth of the business or some of the technical nuances of business. And so IR gets brought in to kind of help educate. So IR is an education role, internally, externally, and as high up at the board, which we did a lot of work at Salesforce with the board, and even other audiences, analyst relations, or with the Gartners or other third parties in the world. So it's a multi-audience, which is another reason why I think it's such a fun job, because you get to interact with all these different kinds of perspectives, and bring some of those perspectives back in, synthesize that, and help really shape kind of not only messaging or partnering with folks like PR and AR, but with the strategy of the business, maybe in corporate development or even in the CEO's office.
Mm.
And we just recently had an episode with Daniela Vallo-Rupali from Cloudflare, and we were talking about the IPO process. And one of the big pieces in that conversation that she was talking about was the partnership between comms and IR and how critical it is. And she walked us through like what that looks like for comms people, but like from an IR perspective, can you tell us like what a good comms partnership looks like for you?
Yeah. Well, first of all the roles that we carry both in IR and PR, it's all about trust, right? And you have to build those trusted relationships internally to do your job externally, and to be really effective. So I think good comms and good partnership starts with building that trust, right? I have a different perspective, or I'm representing an audience with a different perspective than the business might have broadly. And so how to take some of those perspectives and to make sure that the PR teams really understand what these audiences are concerned about, what their interests are, what they get right, what they get wrong, and then how to shape that in the broader context of the business. So first of all, I think it starts with building that trust. And, I think that happens over the course of different forms of interaction together. I think in IRPR, a lot of that was stemmed from the earnings process, right? Every 90 days, putting out earnings and drafting the scripts and building those messages that are core. I think the other key piece is really helping shape the big message with the company, right? So that really lands both in marketing and PR, but also, there's elements to it where IR can be inserted into that. Maybe it's a subtext, but it's really important as you think about the overall value creation for the business. So I think really a big part of that partnership stems from kind of a lot of that trust building, and then working collaboratively on some of those big key messages, and representing both sides of the equation. So that's one area. I mean, I think the other parts, when it comes to whether it's crisis communications or internal communications, I mean, PR is not just one thing, as you all know, as experts here. It's a multi-pronged, multifaceted, and I think just making sure that both sides know the other's key concerns and interests and audiences and what they're paying attention to, that communication is just critical. So,
and when you're thinking about kind of messages and perspectives that are kind of critical to share across comms teams, like what are the key investor perspectives that you think when you're building that narrative or that story in partnership with them that they need to keep in mind?
Yeah. So I think, different investor messages stem from really understanding what the audience concerns are, right? And I think really good IR really knows their market well. They spend a lot of time with the street, both the investors and sell side. They, just on the investor side, not every investor is created equally. So they have different interests and different concerns maybe about the business. So really understanding that and who's influencing who within that echo chamber, because they all talk to one another. So, Fidelity or Sands Capital or Jennison Associates, it's going to have a different set of interests than, say, a hedge fund like Point72 or someone else, right? So they may be, on one hand, on the hedge side, they may be more interested in trading information, trading data, and, the messages would be very different, and the engagements with those kind of audiences versus, hey, let's talk about the long-term compounding story that is this business that we're representing, or the ability to drive profit. So for Salesforce, from the, when I got there, it was around $2.5 billion in revenue. When I left, it was over 20. And over the course of that life cycle, the concerns change and the messages are different. The things that were sort of evergreen were, how quickly can you guys grow? How stable or how consistent can that growth be? How big can you be as a company? And there was always a concern of you're going to run out of room, you're going to run out of runway, you're going to run out of market to go at and continue to grow over the long haul. And then at the same time is, can you do this and be profitable? And that story of both growth and profitability was evergreen, and I think still is to this day at the company. And the tools that you bring and some of those messages actually that we developed years ago are still used today, weirdly enough. Things about how we tell the story and talk about messages using numbers and techniques like unit economics or SaaS margins and SaaS subscription economics, sort of paint a picture of like, here's what profitability can look like in the future, because it's not profitable right now, and it wasn't when I joined in 2011. So,
what is the risk of showing up too big? Like, I think that from a company standpoint, if you want to show up with like a valuation or kind of what that looks like, what was it? Just $170 billion valuation for Anthropic, right? That just recently happened. People look at that and they see that and they say, oh, that company's doing well. But from an investor IR perspective, like, what's going on in your head? Is there any risk of doing that from your side?
Yeah, I mean, I don't know Anthropic that well, so I can't tell you what 170 billion means from a valuation point of view. I think we tend to look at things in terms of multiples, or multiples on revenue or sales, or for more mature companies, or multiples of earnings or cash flow. And so I can't speak to that, but I think the important thing about that is if someone told me Anthropic was 170 billion, and I'm like, well, what's their sales, or what are the other metrics? Tell me how fast they're growing. Why do they deserve to be where they are? And I've worked with companies in the past where they pushed their valuation as high. Well, they could have gotten more for it than they did, but they pushed it pretty high. And, that was something that they felt was important to them, actually, from a message point of view. They wanted to come out and say, hey, we're worth X, Y, Z in value. And I had cautioned the CEOs at the time, saying, it's just a mark, it's just a moment in time. Evaluations come and go, right? What you want is consistency and stability. You want, that compounding. You want to show people there's progression in this business. And that gets back to maybe some of the bigger messages, right? What is the big message at Anthropic? That they've got a huge market opportunity, they're just getting started. You want to be able to show what the potential in the future of that looks like. And if it's too high, which was the case for one of the companies that I worked with, they pushed the valuation high, and now they have to grow into that valuation. And that takes a long time, and that has implications for employees, employee stock options, the overall perception of progression and growth for the business. And so it was a great headline 3 years ago, but it's not a great headline now. So I think it's one of those, you have to be careful what you wish for when it comes to things like valuation. And I would, if there's any CEOs listening to this, listen to your IR people, and they tell you if you're trying to push the valuation too high. So.
And it kind of comes back to, I mean, it's something that we talk about in comms too, but I think it's aligned, is kind of playing the long game. Like, yes, this might be the right story today, or it's a great story for today, but are we in 3 years' time going to, look back on this and say, actually, we probably should have been a little bit more cautious? And I mean, it's something that, comes to mind from days gone by in different companies, is talking about hiring numbers, or talking about and kind of just being really cautious on, it might seem like a great number now, but if we go backwards, or if it doesn't grow as fast, then those numbers are always going to be out there. And so I think it's just a good reminder to always be thinking about, what's this going to look like in 3 years' time? Are we still going to want this number to be out there?
100%.
Yeah.
100%. I mean, that big picture, back to the big message, let's focus on the long run. This is the long game. I can think of an example at Salesforce where there was a metric that, a certain executive didn't love, and they did a big deal, and they charged the customer, or they asked for, I shouldn't say charged, they asked for a multi-year contract to get paid up front. So a certain executive said, great, I solved your problem for you. Your cash flow, I know your number was going to be a little light this quarter. I'm like, please don't ever help me again, because it was like, I do not go fishing with dynamite, because what happened is we spent the next 2 years at least reminding investors, remember that big cash flow number we had that quarter? Well, we did this one big invoice, and
Oh,
we built
yeah.
it all up front, and we collected it all up front. So now my next year cash flow looks really bad. And so
Yeah.
you want that progression, right? It's all about consistency, it's progression. And a big part of that too is making sure that there's no surprises, right? So something like that can surprise Wall Street. They
Yeah.
don't like surprises. And surprises leads to volatility, which leads to higher beta, which leads to higher cost of capital, which is a more academic discussion around value and valuations. But at the end of it, it's just don't surprise people, right?
Yeah.
And I think you asked, like, what's the role of IR? And I think a big part of it is that. And Katie and I were talking earlier, Boyson, about a company in the space today, Confluent, whose stock's off 33%. I mean, that's not good. And so, every company is going to have their dark days, and every company is going to have a quarter they miss. But a 33% drop is a big miss. Or they didn't, or somehow the market was not expecting this. And so that's where you get into the education, part of the art of that narrative, and making sure that you're really preparing the market for it. Now, this is not a knock on Confluent. I love the company. I think they're amazing. Stephanie Buscemi is CMO there, and we worked with her, and it's an awesome company. And so, but you're going to have to ask yourself some questions of why the reaction is, and should it be that? And I'm sure everyone right now is going into crisis mode to say, okay, how do we manage this message? How do we dig ourselves out of this? Because maybe they just have to work their way out of it from an earnings point of view and show consistency and show the growth. But that there's somehow that I think there's always a disconnect.
Yeah.
So
that was one of the things too when we were talking about the Confluent piece as well, is like the amount of internal comms you'd need to do to be able to prepare your employees for that type of hit as well, to make sure that they understand, like, and everyone is really clear on the vision and the goals and how they're moving forward at the company. So that people don't get bogged down by the headlines, because some of them that we saw that we were talking about, John, were brutal.
yeah, and look, this happens, and it's part of it goes back to the role. Who are your three key audiences, right? Internal, external, and you can bifurcate some of these, but that internal, so 100%, like, they should be spending time, doing some departmental tours, and they're going to do a internal call, I'm sure, if they haven't already, about the results, and saying, okay, we announced them today, and the street overreacted. We don't think the street should have been, reacting. I'm sure that's what they're saying.
Yeah.
But, there's a lot of sell-side research will be out there talking about the reasons why and what they're going to have to do to crawl their way out of it. So it's not good.
I do think it's an interesting, and maybe it's not super new, but I think for Australians maybe a little bit newer, but that a lot of these newer companies, most employees, maybe not all, but most have equity in the companies, or at least if they're not public, pre-IPO equity. And so I do think it's created a new paradigm where your employees are not just your employees, they're also, shareholders or potential shareholders. So that's been interesting, I think, because, if I think about maybe my parents' generation or, different industry, that's not necessarily the case. But in kind of this sort of high tech or high growth space, it feels like that's a big step change and something that, IR particularly, but comms as well, needs to be thinking about.
100%. And there's a lot of incentives they put in place at companies now as a big part of their benefits. It's saying, is there an employee stock purchase plan? Right? Because employees can get a discount on their stock on the way in. And it's, in effect, free money. I mean, I used to talk to our employees internally all the time saying, if you're not part of the ESPP, in essence, you're an idiot. Try not to be, try to be the jerk is that, but I'd be like, why are you? So you're right. But I think the total participation, though, was somewhere around 75 or 80%. 80% of 10,000 people, 20,000 people. I mean, that's a lot of people who are owners of the stock. So you go back to who are our audiences? It's investors, it's sell side, and it's your employees who also happen to be investors. And so you have to have a lot of discussion. We would spend a lot of time talking about what's the opportunity, where are we going? If there was an issue like this, we'd have to get into crisis management mode and say, yeah, these guys overreacted and we're going to fix it. But the real value of the company is X. Again, it's just a moment in time. It's a mark. It doesn't feel good. right? And if anything, it's like, now's the time to buy, maybe. If you weren't part of the MVP before, now the stock's on sale. It's 33% off. You know, it's a back to school sale. So,
I love that. I think
yeah,
also just thinking about when you're going back to that message and kind of the big picture message as well. Like you're working with analysts and investors every single day in that role. And the bullshit meter is so high. Like they know when you're fudging a message. I think from a comms perspective side too now, just kind of what based on what we're talking about, it came to me that like employees are very similar now too, so just when you think about crafting that message, it's just so incredibly important to consider the audience and really understand where you can build trust and let them in based on what they need to know.
yeah, it's so important. And as I think about and reflect at Salesforce and some of the work that we did there, and a big part of the job is paradoxical, right? So for all comms people, on the one hand, your integrity, everyone on this who's listening, right? It's your integrity. That's your currency, right? People's ability to trust you with the message, trust you to deliver it, trust you to carry it, build it, and so forth.
Mm.
You know, if you're having to deliver a message that's not credible, then you destroy your own credibility and you destroy your own ability to be effective for the company that you're serving, right? So you have to balance this. So I think that when I was at Salesforce, I think we did a pretty good job by balancing that bullshit piece. So there would be times, for example, very specifically, when the company announced the acquisition of Tableau, they'd say, John, what do you think about this deal? And I would say, I don't think I love it. That was not a key message from PR. Hey, keep your opinions to yourself, jackass. It was, but it was important for me to say is, I don't love it for the following reasons, but here's why I think I can be optimistic. Here's where the opportunity is, and here's where I see why I could see there'd be some concerns. Number one, acquisitions tend to not be successful in the long run in many, many cases, in short run in others. And so the odds are stacked against companies who are doing a lot of acquisitions. And that was another evergreen topic we had to manage at Salesforce. But I also think, managing that credibility, if I came out to a lot of really skeptical people who hated the deal and said, oh, I love it, let me tell you why I'm frothing at the mouth about it, they would have dismissed me right away and said something is wrong, right? Or they're going to not talk to me anymore. And that's a small example. But then if I can at least admit or own up to where I stood vis-a-vis the integrity of the message, then I can shape it. Then I can continue to manage it over the long run. And back to your point, KDD, it's about, are you playing the long game or not? Because in the short run, people are going to say, yeah, I don't love it, but I think here's the opportunities that they have, and I'm going to have a lot more opportunities to talk about the long-term success of whatever that issue is, as long as I safeguard my own integrity, right? And some people are get caught up in situations where they lose that, and I think it hurts them in the long run. So I don't know if that gets the entirety of the question, but I think it's a super important piece for especially anyone who's listening who may be new in either PR or IR.
Yeah. So I had a question around, we had, as we said, we had Daniela on, and she was talking about kind of in the run up to IPO, some of the stuff they did to sort of get ready. But I'm interested in your take on, like, when is the right time for a company to have an investor relations function? Is it from the start? Do you think it's as they sort of, certain series they go through? Like, when is that trigger point where you think, okay, you need this function? And how close to, or is it from the beginning maybe? I'd love your
opinion. No, I've had this question from founders and from CEOs who've ultimately gone public, when they should hire someone and what that looks like. In fact, there's someone, chair who was very close to me, worked for me, who's at one of these IPO companies that went a couple of years ago. It's going well, but I had developed a trusted relationship with the CEO, and it was like, bring in someone as soon as you can, right?
Yeah.
And they kept saying, well, we're not ready. We're not ready. We don't want to send a signal to the market by hiring someone, especially if it's someone's well known, that they're going to, they're getting ready to go public because they hired an IR person because everybody knows each other, right? So, but I think to the extent possible, like, so when I went to Celonis, a big part of that was let's talk about what it's going to take to get IPO ready. Now, I got involved, and one of my charges was also raising capital in the private markets, but ultimately the goal was and still is to go public. Um, and so my advice to CEOs is bring them in early, because the more that you understand the business, the more you can tell the message, build the relationships internally and externally, the better off you're going to be, and the better that person is going to be equipped to build real value for the business, because they know what they're talking about. They have the partnerships internally and externally to help, and so it's at least 12 months, but they should be involved with writing the S1, right? They should be involved with, so before that S1 ever has pen to paper to it, you should have an IR person. And maybe even, a year earlier than that, because that it takes a year to get to know a company, really.
Oh, totally. Yeah, I think it would be very hard to come in, and it's like, okay, in a couple of months, off we go.
But you see that. I see that a lot. Like, oh, someone was hired to go to be on IR.
Yeah. Like, oh, we're pretty close. We better get an IR person. And it's like, God, this poor IR person's coming in hot at the end.
Yeah. But I feel like, too, with like comms people as well, like as a consultant, especially where, it's the same kind of idea where they're like, oh, we should bring in an IR person. And then for a funding announcement, John, you see this as well. Like, oh, we need a comms person to do this funding announcement. And they're like, it's in a month, like.
Right.
Yeah.
So I feel your pain on that.
Well, I think it's important too to have some historical context to the business and the numbers, right? So, most, F1s, you need 2 years of financials. So that IR person should have been there so they could say, oh, remember that growth rate from that number 2 years ago? The reason that growth rate is what it is was because of whatever the nuance in the business might have been, one way or the other. And now you've got someone who can actually speak authentically about the number. They were there. They can talk about it. They can say how the business is shaped. Maybe the product roadmap has changed. Maybe technology has changed. There's a lot that can happen in a year and a half or 2 years at these businesses, and IR should be able to speak to that, as well as the CEO and the CFO. And if the job is just to set up meetings for the CFO or the head of finance, then then the company's not thinking about the power of the strategic role of communication, PR or IR, for that matter.
Yeah.
Right?
Yeah.
The more that our groups have a seat at the table, the better off companies are, because they bring in perspectives that they may or may not have.
When you start to think about crafting that IR narrative, like what does that process look like? And like, when does that start?
Throw the papers up, and then you sort of shake them around.
It just your first toe goes through the door in your first day of work.
Right. Yeah, I mean, look, I think the narrative building comes again, I'll keep coming back to it, is get to, make sure you know the business as well as anyone inside the business. And I think this is pretty true for PR. It's definitely true for IR. You can talk to anybody you want, because at the end of the day, to what you said, KDD, they're investors, right? So you're talking to an employee or an executive, or someone who's a departmental leader. I mean, I used to get a lot of information to understand what's going on in the business from the controllership, because they're managing all the numbers. Yeah. They can see who's been fired. They can see who's going to be fired, right? Because they're working on severance packages. You get so much advanced information by digging into the numbers inside of a business, as well as going to talk to sales. I would talk to sales reps all the time, right? Yeah. They'd usually be at the bar on the corner from the office. Convenient place for me to go. But you could always find someone to talk to and really get to know about really what was going on in the business. What's customer sentiment? What's going on? It's a fantastic role, because you can inspect it in ways that a lot of other people can't. or they're suspicious if you're asked. I mean, if I'm an accountant, I'm saying, tell me what's happening in sales, right? They're going to be like, huh? But IR gets a little bit different whole pass. So that narrative building starts with a deep understanding of the business, both from the numbers perspective, because that's ultimately what's going to get translated into your external messages, but just from the whole broader spectrum. And it might be that that you can come to the table with some unique ideas for management that could be influence the way they think about compensation structures that they're giving to their executive teams, or it could be things as innocuous as, or important as an M&A or an M&A target, right? And provide that feedback saying, this is a company that's up and coming. Do you have it on your radar? I continue to hear them from Wall Street or my sources, in the venture world, that this is a company to be on the lookout for, or here's where they're doing well. Here's how it's affecting the competitive landscape, or I'm picking up this intelligence elsewhere. So that narrative starts from that kind of that understanding of an inspection of the business, and then making sure that you understand it too from the reporter's point of view or the external.
I imagine the narrative getting extremely complicated as you go through acquisitions.
Yeah.
You're the king of them, from what I understand, being at Salesforce.
The king is dead. Long live the king. But yeah, I mean, we did. I'd have to, if you go back and you just look at Wiki on the number of acquisitions, the list is longer than my CV, right? And there were small and big ones, and I think for us at Salesforce, part of the messaging around acquisitions was first again educating on rationale, and I don't mean deal by deal. So for us, it's like, let's stop having to do a tactical fight over each acquisition and frame the messages around how we approach M&A. So we put a framework together, really started from a messaging point of view that we gave to the M&A team, saying, this is how we're talking about M&A externally.
Yeah.
You should be thinking about it this way too. There's a little bit of tail wag the dog. And part of that was, there's M&A for acqui-hires. We're just making the small acquisition to pick up talent. We're making this acquisition to enter new markets, like we did with ExactTarget, Demandware. And then there's M&A to augment product. So Cloud Craze or a number of other products that got integrated into the overall product set. Quip, for example. So those are examples. So now, armed with a framework, it was a lot easier to go out and say, hey, that acquisition we just did, I know you didn't love it, but remember, it opens up this whole big market for us, and here's how I position it. So yeah, I don't love it. Here's the reasons, but here's the opportunity that I see there.
Right.
By the way, it fits right into the broader narrative that we're talking about as it relates to the opportunity set and how we think this is going to be accretive in the long run to basically our growth. Right. And then the other part of that M&A piece was really getting back to the areas of inspection and making sure the right partnerships inside the business. So the other was with accounting. So for me, it was really working with accounting and the finance teams to say, okay, I'm going to have to go out and tell the street why we had to use purchase accounting for this transaction and what that means for our numbers. Again, so you're not surprising anyone what that means in the long run. So you really have to inspect the business. So yeah, M&A it would always make me groan when we were going to do another transaction, but it was always challenging because you knew that challenge of the message was going to be there, particularly with an audience that was concerned about growth and profitability, of which M&A has a very direct implications for.
Just thinking about, for people that are loving this conversation, if they want to get into IR, like, what are the right pathways as you grow? Like, what blend of skills do you need?
Yeah.
What does getting into it look like? What did you major in?
I studied political science as an undergraduate, and I went back to business school kind of after I got into IR. But I think there's a number of different routes into it. When I was hiring for my IR team, I looked at other sell side analysts who knew the street, knew the market, right? They are finance people. They're finance people. Can they tell a story, right? Then there are PR people. It's like, are they storytellers who can actually understand numbers, right? So I hired accountants. There were one, two, three. Gosh, a lot of the team that I hired into Salesforce, for example, were accountants. When I was at Salonis, it was a former sell side analyst who I brought in, who was an outstanding writer, an outstanding communicator, because that was a big part of their role, and so happened really knew numbers and finance. But they have to be able to have that cultural affinity to saying, I can be a little bit, certainly working for a wild and woolly software company, you have to have the right personality to be able to deal with strong personalities and founders. So I know KDB, you and I talked about the ability to speak truth to power. Like that is so important in the role, right? But and I'm sure it's the same in PR. That ability, if you have to be able to show up and say, I respectfully disagree with the strategy. I respectfully disagree with where you're going. I will commit and move forward. But you have to be able to say, here's why I disagree, right? This audience is really concerned it's going to have an impact to the overall value of the business. That's okay. If it's a sacrifice for the long run, I get it. Let's tell that story. But you have to be able to have those really difficult conversations. So that may not be how you get into the role, but it's an essential skill to have once you're in it to be successful. And I think it's, again, why I'm here, because I had that trusted relationship with Keith where I could say, hey, you know what? This is a terrible idea, and let me tell you why. Right? Or this is a great idea, or you're not thinking about this the way I think you should. And so that's one. But look, having an understanding of finance and numbers is important. You don't have to have that. But if you're a communications major, take some accounting classes, right? Or not. Or if you're interested in the role, having a fundamental understanding of the three statements that you're going to work with, because you have to deliver them 4 times a year. And there's other times I'm not an accountant, but I know enough to be dangerous, and I know enough to look at the numbers and inspect them in a way that you can use then your creative side of your brain to say, oh, that number looks interesting. Let me tell a story around it.
Yeah.
Or know that I'm forced to tell a story about that number. So I think it's that sort of blend of communications, marketing, storytelling. But an understanding of not finance per se, but certainly the way a company is reporting in its business, because that's ultimately how it builds value.
I love that. I just see so many similarities between IR and then the comms function as well. I love that you just said storytellers who could understand numbers. I feel like comms people are always like, I'm a words person, I'm not a numbers person. I feel like
IR is not for me. I am not. I always say to people, the day I learned to actually understand and try and absorb the numbers and get that side of it helps you enormously in those rooms. Even if you go into IR, I think all comms people should understand how the company's reporting its numbers and those different stuff, because it just changes the game a little bit, I think.
Yeah,
totally.
And their job should be to help you understand which metrics matter, right? Because some matter and some don't. And here are the ones that really matter, and here's why. And here are the ones that don't matter, and nobody cares. Yeah. And so it's another one of my favorite sayings in investor relations: nobody cares, because half the time you think something's a big deal, and nobody cares.
Well, and that's what I was just going to ask you, John, because you have 2 mottos in IR, and one of them makes me think of PR so hard. But tell us the 2 mottos that you have, and then I'll build my tie into that.
We had 2 mottos at Salesforce: nobody cares, nemo curate, nobody cares. Because there'd be so many times where, like, if I were saying something and people are like, nope, we've already made our decision to do something else, nobody cares. So, or it's the other way around. We think something's going to be such a big deal, and you're like, build a whole narrative around it, like, oh my God, you better be ready to talk about this, and you don't get a single question. So I could prep management, like, they're going to come after you on this, cash flow efficiency number, and so. The other one, which is probably more apt for everything, was it is what it is, right? It est quod est.
Yep.
It is what it is because you're just you're dealing with whatever cards that you have dealt to you.
Yeah.
It could be a messenger, whatever it is what it is, and so you have to have adaptability and creativity to sort of work your way around it. So I think adaptability is another critical skill
Yeah.
for in the role.
Love
When
that.
John first told me these mottos, I was like, it reminds me so much of how we say Duvesey. It's PR, not ER.
Yeah. And I think the other, it's like it is what
Software people. It's just software.
it is somewhere. But it is what it is like sometimes you get asked to like, hey, like this is going to be really bad. Like, what can you do about it? And you're like, well, not a lot, since that's like an actual fact and that's going to happen. Like,
It is what it is.
it's like we can't, and sometimes like it is what it is. Is like if it looks like a duck, it quacks like a duck. It's a duck, and they're going to write about it.
Yeah,
Exactly.
exactly.
Right.
Yeah.
Yeah. So,
Well,
yeah.
John, we've loved chatting with you so much. Thank you so much for joining us. You've shared so many insights. You've made us so much smarter. But what we really want to know is, how are you dumb in private, John? Do you have anything to share with us?
Okay. So, for the audience, I did know that this question was coming also because I've listened to a few of these before. And I thought of something that I did. It was really stupid. So a few weeks back, in my house I had this like fountain in my backyard. This is like a dull, boring story, but the fountain is like this giant boulder, and there's a thing that
Send me a
comes out of
picture of
it.
this fountain, by the way. I will share it with everybody.
Anyway, so at the beginning of the year, I went to turn it on. It's the first nice day in the backyard, and it's not working. I'm like, son of a bitch! It's like I've got a thing burnt out. Now I'm gonna have to go put in a new pump, and so I'm sort of that guy on the weekend, and so I was like, okay, roll up the sleeves, and I start digging underneath this boulder. It's gonna crawl and crush my hand. I'm gonna have to saw out of it like that guy in Colorado, and I spend all day. I run a hose. I drain the reservoir. I get in there. I finally pull the pump out. I clean it all out. It's now like mid-afternoon. It's hot. It was miserable. I check the circuit breakers. I do all these things to try to get it to work. And right when I'm about to give up, I'm like, oh, wait, what is this cord right here? And I plug it in, and it was just unplugged.
I love this story so much, John, because it reminds me so much of Chevy Chase Christmas Vacation with the Christmas lights. Like, it's such a dad move.
I was like,
Thank God your wife didn't find the cord. Like, thank God you found it.
oh my God, are you kidding me? Like, I can't enjoy this fountain the way I used to.
It's time to bulldoze it out. It's too much of a traumatic memory for you.
If it was something that I could look at and like, oh, I'm so proud of myself for cleaning out and making all this work. I love that fountain. Like,
You have PTSD. It's time for it to go.
I honestly, I'm gonna get a jackhammer, but then I'd probably lose a toe in the process, and then it would
Probably. Yep.
Yeah. So
Oh my God, I love it.
Yeah.
I love it so much. Well, John, thank you so much again for joining us. We just
my God.
absolutely
Yeah, thank
adore
you.
you.
Thank you for having me on. I don't know why I have my glasses on. I should actually see you guys now. That's my new dumb in public. I
Yeah,
just
take
need
your
my
glasses
for
off.
this.
Before you go, can you just give a shout out to the Australian audience with your Australian accent? Because it is
Yeah.
pretty good.
Thanks for having me. It's a nice time here on Smart Public. And yeah, good on you. Have a good day.
Even the cadence of like how your inflection goes up.
It's great. It's
Watch
a
a little.
little bit. Have you seen? This is not. I don't mean this to offend you, but have you seen the movie Wolf Creek?
No. Do I need to watch Wolf Creek?
It's based on like some of the backpacker murders that happened in Australia. But the guy who plays that guy, he's a wait, I'm getting there. He's a very iconic Australian actor, but he plays this in Wolf Creek, he plays this really freaky guy, but he's really like, I don't know, he's got a really interesting Australian accent, and it's sort of like yours. I'm not gonna lie. So there you go, John.
Is it Hugh Jackman? Does he play the didgeridoo? It's on the
John Jarrett is his name.
Oh my god, so good.
In the show, I think he's called Mick, and he's a pig shooter.
And
And,
you,
and also he murders people, but that's by the by. It's just more about yeah.
oh, oh my
Great.
god, that's
Now I'm gonna have to watch it. I don't know if when the kid's asleep, I guess I'll put it on.
Freaky, yeah. Don't watch it, late at night. Or if you're heading on a backpacking trip around Australia, I wouldn't advise it. But other than that,
definitely has. It's like Hills Have Eyes vibes. That movie, I would say for sure.
right. It's a great Australian movie, but it is in the horror murder genre. But
Is there a didgeridoo in it? Because that's fair. Like that'll.
no, I don't believe there's a didgeridoo. There's a knife, and he drives a big truck down the Nullarbor it's supposed to be. But yeah, it's great. It's a great movie. But he has it like a little cadence in his accent, and it just reminded me of that.
I love that so much.
Yeah. Well, I mean, I'm happy to come out and see people in Woolloomooloo or Woolloomooloo and yeah. I don't want to. I'm not telling you in the risk of offending anyone else.
No,
Straight to the Australian top charts.
yeah, we'll finish now before we hurt.
Hey, I'm honored to be here, by the way, that you'd asked me to come on and share knowledge that is sort of a little in the rearview mirror, but some of it's evergreen. So, and I talk to friends who are still doing IR now, and some of my former colleagues who are leading these roles. We talk about the trials and tribulations of what they're doing. It's a fantastic career for anyone interested in it. Happy to talk with anyone if they'd like to spend time talking about other experiences. But thank you guys for having me. It's really fun.
Thank you, John.
Yeah.
And if anybody has a guest or a topic suggestion or anything like that, please reach out to us. You can email us at hello@smartandpublicpod. You can find us on Instagram, TikTok, and on YouTube at Smart and Public Pod. And thanks so much, John, again for joining us. And
Thanks, everybody.
we'll chat to you guys all next week. Okay,
Bye.
bye.